Hi there, Evan here with Crypto and Markets for Friday, May 24th, 2019. This one is going to be audio only. I am recording this on my ride home for the weekend. If you do hear any background noise because of that, I do apologize in advance. Anyhow, let's get right into it. It's looking like, as I've been saying on here for many months, that the global synchronized recovery that was supposed to happen in the second half of 2019 is in fact not going to happen. As I've been saying on here, all of the indicators that I follow, global PMIs, money supply growth globally, just wasn't confirming that. And especially from all the data that's come out in the last couple of months, that looks like it is the case. I mean, and you look at the stock market as well. Since really about March, small caps have been underperforming large caps. Cyclicals have been underperforming defensives. Again, two things that typically don't happen when the economy's on an expansion path. In fact, have a look at even the U.S. composite PMI last month for April. It was a recording of 53 in March. That slowed down to a 50.9. That's a 50.9 last month. And to put it in context, any reading below 50 signals contraction. So again, if we were to see an economic expansion, we'd be seeing everything go the other way. And if the global economy were recovering, we wouldn't be seeing the 3-month 10-year yield inverting like what happened, I believe, on Wednesday of this week. Again, yield curve inversions always precede recessions. No matter what anyone else tells you otherwise, this is actually probably the most accurate indicator out there. Always has been, always will be in my mind. But again, it only inverted on Wednesday of this week. So for it to be an accurate indicator of sorts, it will have to stay inverted for an extended period of time. But again, the longer it stays inverted, the more than likely that we are headed ultimately where I do believe we're headed as a global economy, which is into a recession. Now I can turn the focus on Canada here real quick. It looks like business profits in Canada are slowing. We're down to a rate of only 2.2% year over year. That reading was put out by Capital Economics this morning. Another thing that came out, Better Dwelling put this out, I believe, this morning. It looks like in Toronto and Vancouver, unemployment rates are starting to tick up, which again is another leading indicator that we're headed into recession. Now, Toronto and Vancouver, they're Canada's two biggest markets. They're Canada's two biggest housing bubbles. And as I've been saying for many times on this channel, the housing market was the economy. And I notice once housing starts to turn down, other elements of the Canadian economy generally start to turn down. And now we're starting to see unemployment, another leading indicator, starting to tick up. So I'll keep it brief to go ahead and put it in closing. Oh, one last point before I go. It looks like in Canada and Australia, I'm seeing a lot of this now too. It looks like the real estate lobby is really starting to get desperate. We're starting to see a lot of articles come out now trying to tell the masses, oh, real estate's starting to pick back up again. Oh, things are fine again. Really, at this point, I don't even pay attention to it anymore, frankly. You follow my channel long enough. It's all desperation. I've been saying it's all desperation, and really that's all it is. But to go ahead and put it in closing, keep it short, keep it simple. The global economy is not picking up steam. In fact, it's slowing down further into a recession. And the Canadian economy, well, it is what it is. Again, the chart showing the business profit growth slowing in Canada. I'll put a link for you down below so you can read it. Better Dwelling article. I know many of you that follow my channel are subscribed to it. If you're not, I'll leave a link to that article down below for you. Smash that like button, leave a comment, subscribe, follow me on Twitter. Have a good day.